Hello everyone, Justin with Deep Dive Stocks here, and today we're going to be looking at Deep Dive Stocks' new tool, the Gamma Trending Metric, or GTM for short. GTM is a tool that allows us to be able to predict the future change in the number of gamma squeezes throughout the market, and it's pretty insightful. So today in this video, we're going to look at GTM, what it measures, and why it's important that we know if the future has more gamma squeezes or fewer gamma squeezes in the cards. So let's go ahead and get started. GTM is a tool that allows us to predict if the number of gamma squeezes in the future throughout the entire market is going to increase or decrease. So the first question is obvious. Why would we want to know if the number of gamma squeezes in the future is slated to increase or decrease? Thankfully, this is a pretty straightforward answer and it is pretty clear to see. For instance, if we compare the performance of the market, and in this case, we're going to use SPY as a proxy for the market. If we look at the performance of SPY with respect to the number of gamma squeezes in the market, we start to see a pretty striking association. We can see that here when we look at the market-wide gamma squeeze counts and the performance of SPY. And here we start getting our first indications that there might be an association with the number of gamma squeezes and future market performance. For instance, notice that during periods of large gamma squeeze counts, the market tends to experience downturns. And this isn't too surprising. We know from the research at the individual equities level that a gamma squeeze will typically push a stock down about negative 4.82% on average before the recovery phase kicks in. So it logically follows, or I guess it just kind of makes sense, that if you have a large amount of gamma squeezes throughout the market, you can expect the market to not perform well, or at least to experience a little bit of a pull down. And that's exactly what we see when we look at just the number of gamma squeezes in the market and then how the price of SPY changes over that same time frame. This association becomes even more apparent when instead of just looking at the absolute number of gamma squeezes in the market, we start focusing instead on the rate of change of the number of gamma squeezes in the market. We can see that below, where instead of just looking at the absolute number of gamma squeezes in the market, we instead look at the rate of change in the number of gamma squeezes in the market. This is reflected on the SPY graph with two lines. The first is the gold line, which is the 5-day running change in the number of gamma squeezes, and then the black line, which is a overall trend for that 5-day rolling average. And we see when that trend line is above 0, indicating that the market is experiencing an increase in the number of gamma squeezes, we see that the market starts to experience a downturn not long after. Conversely, we see that when that trend line is below 0, indicating that the market is experiencing a net decrease in the number of gamma squeezes, the market tends to appreciate afterwards. With this association in view, it becomes reasonable to want to design a tool that can help us predict if the number of gamma squeezes in the future is going to increase or decrease, as this would give us a very potent leading indicator or leading view into expected future market performance at a pretty global scale throughout the whole market. It's pretty good. And so that was the main reasoning behind the creation of GTM. How GTM helps us with this is it measures two groups of stocks. The first group that GTM measures are those that are not in a gamma squeeze, but have the conditions forming for a potential gamma squeeze to occur. The second group of stocks that GTM monitors are those that are in a gamma squeeze, but look as though the gamma squeeze is nearing its completion. So essentially, GTM is measuring the potential flow of gamma squeezes into the market and the potential flow of gamma squeezes out of the market. It's pretty straightforward. So when GTM prints positive values, this indicates that there is a flow of potential gamma squeezes into the market that is greater than the flow of potential gamma squeezes that are ending out of the market. In other words, we can expect an increase in the number of gamma squeezes. We can then smooth this value over a little bit and produce a nifty graph that simply tells us if GTM is printing above 0 or below 0. Let's take a look. And here we see an example of a GTM graph. When GTM prints positive values, or when it's above that red dashed line, it indicates that the future outlook for the number of gamma squeezes throughout the market is positive. In other words, we can expect the number of gamma squeezes to grow. When GTM prints negative values or below the red dashed line, that means that we can expect the number of gamma squeezes in the market to diminish. And as we stated, this has direct associations, or at least visually, with the performance of the market as a whole, as is measured by SPY. But visual inspection of stock market data is nice, but it's much preferable if we can get some cold hard facts and determine if this association is just visual and wishful thinking, or if it is represented in the data as well. In other words, we need to ensure that GTM is doing what we want it to do when we built it and that it has actionable insights. To do this, there are two main things that we need to ensure. The first is that GTM is associated with the future change in the number of gamma squeezes. And the second is that the future change in the number of gamma squeezes is associated with even more future changes in the performance of the stock market. The first point is pretty straightforward. We can take GTM and then look at the future change in the number of gamma squeezes 5 days out. This association is shown here, and as we can see, the association is pretty strong. Here, the x-axis is GTM, and the y-axis is the average daily change in the number of gamma squeezes for the next 5 days. And so we see the association is pretty strong. As GTM increases, so too does the expectancy for the average daily change in the number of gamma squeezes in the future. Pretty nifty. So now that we see that GTM is associated and reasonably well with the future change in the number of gamma squeezes, let's look to make sure that the future change in the number of gamma squeezes is associated with future changes in market performance. To do this, we can look at the rate of change in the number of gamma squeezes in the market and map that out to the change in the market's price as measured by SPY 20 days in the future. And here we see that the association is incredibly strong. Here we see that as the rate of change in the number of gamma squeezes increases, in other words, the market is experiencing greater and greater amounts of gamma squeezes, the overall performance of the market over the next 20 days is predominantly and almost resoundingly negative. There is a small cluster of outliers up in the upper right-hand corner, and they're going to be interesting to investigate a little bit further down the line. But we also see that as the rate of change of gamma squeezes is negative, in other words, there is a net destruction in the number of gamma squeezes in the market performance is universally bullish, or almost universally bullish. That means that our two main quick investigations into the efficacy of GTM and its actionable insights are showing positive results. We have GTM that is associated with the future change in the number of gamma squeezes, and we have the future change in the number of gamma squeezes being associated with even more future changes in the performance of the market. All with one graph and one line. Honestly, pretty nifty. In this video, we went over why GTM is an important addition to the deep dive stocks ecosystem. We saw that visually the association between the number of gamma squeezes and the rate of change in the number of gamma squeezes is associated with the market. So to take advantage of this, we designed a tool, GTM, to be able to indicate to us if the number of gamma squeezes in the market is going to increase or decrease. We then saw that this GTM value is associated with future changes in the number of gamma squeezes. And then we saw that the rate of change in the number of gamma squeezes is associated with future performance of the market as a whole. In short, that means when GTM is positive, we can expect the market to decline, and when GTM is negative, we can expect the market to appreciate. And I think that the overall association between GTM, the market-wide gamma squeeze counts, and the performance of the market is best exemplified in this graph. This graph highlights when GTM is positive, when it is negative, and we can see what the change in the gamma squeezes were, and ultimately what the change in the market was. And it's beautiful. We see just how clearly of a leading indicator GTM is. And all of these reasons are why GTM is now proudly placed on the macro report available to members. That way, every day we can look to see if the market is expecting an increase in the number of gamma squeezes or a decrease in the number of gamma squeezes in the future. And with that, whether or not we can expect the market as a whole to appreciate or depreciate in value. And so that's all I have for you guys today. I hope you enjoyed. I'm enjoying GTM and tinkering with the data to come up with ever more tools to provide actionable insights into the market. And all right, I'll see you guys later. Happy trading, and until next time. Bye.